Welcome to The Explainer. Today, we're going to cut right through all the noise and give you a super clear, no-nonsense guide to building wealth. We're breaking down a simple but really powerful strategy that you can actually start using.
All right, let's just jump right in with a big question. Seriously, think about it for a second. 100 grand lands in your lap. What do you do with it? How you answer that question tells you a lot about your current thinking on investing, and we're about to build a framework that really works. Okay, so you've got this chunk of cash. Now the goal is to put it to work, but smartly, right? We don't want to take on a ton of crazy risk or make this feel like a second job. So what's the game plan?
Honestly, it is this simple. Step 1, you take every single tax break you can get. We're talking Roth IRAs, 401ks, the whole shebang. Why? Because that's basically free money the government is letting you have. Then, with whatever's left over, you put it into a broad market index fund. Think of it like buying one single thing that gives you a tiny piece of hundreds of the biggest companies out there. It's simple, it's diversified, and it is incredibly effective.
So why an index fund? Well, you're looking at history here. The S&P 500, which is what these funds track, has returned an average of about 10 to 12% a year. Now, what does that number actually mean for you? Well, at a 10% return, your money has the potential to double about every 7 years. That, my friends, is the magic of compounding. You are letting the market do all the heavy lifting for you.
All right, now we have to talk about one of the biggest distractions in the investing world: gold. You see the ads for it everywhere, you hear all the hype, but does it actually build wealth? Let's just look at the cold, hard data. The numbers on this slide tell the whole story, don't they? It's not even a close fight. Sure, gold grew, but it got absolutely left in the dust by companies that are out there creating value, making products, and innovating. When you invest in stocks, you're investing in human progress, not just a shiny metal.
And here's the real reason why. You have to understand that gold is fundamentally a fear-based asset. Its price spikes when people are panicked about the economy, but it doesn't actually produce anything. Companies in the stock market, they generate profits, they pay out dividends, they reinvest to grow bigger. Gold, well, it just sits there.
Hopefully that little breakdown clears up the hype versus the reality of gold. And hey, if you are finding these insights useful, do me a quick favor. Take 1 second to hit that like button and subscribe to the Stock Market Mojo channel. It seriously helps us keep making more clear, actionable guides just like this one. Okay, so we've covered what to invest in, but now for the next piece of the puzzle: where do you actually put those investments? Getting your account set up right is absolutely critical. Let's run through 3 super common situations. First, if you have an old 401k from a job you left, roll it over into an IRA. That's an individual retirement account. It gives you way more control and way better investment options. Second, if you're self-employed, you've got some awesome options like a solo 401k to save really aggressively for your future. And finally, what if you have a pension? That's amazing, but you have to treat it like a bonus, like gravy on top, not the main course of your retirement meal.
This quote right here perfectly sums up the mindset you need. You are in the driver's seat of your financial future. Relying only on a pension from one company is a risk you just don't need to take. By saving and investing on your own, you make sure you'll have more than enough.
Okay, so our long-term plan for retirement is locked in. But what about those other big life goals? You know, the ones that are a little closer? How does our strategy work when you're saving for something big, like a house?
This is a huge one, right? And the correct answer all boils down to just one single thing: your time horizon. When do you actually need to get your hands on that cash?
So if you're not planning on buying that house for at least 5 years, an index fund can be a fantastic tool. Why? Because that 5-year window is generally long enough for your investment to recover from any of those scary market dips, giving you the chance to benefit from those higher average returns we talked about.
But, and this is a big but, if you're trying to buy a house in the next year or two, the stock market is just too risky. It's like playing with fire. A sudden drop could wipe out a chunk of your down payment right when you need it most. For these short-term goals, safety is everything. A high-yield savings account is the smart play. It protects your money while still earning you a little bit of interest.
Whew. Okay, we have covered a lot of ground, haven't we? We've talked about a windfall, about gold, about retirement accounts, and saving for a down payment. So what's the one big idea, the one thread that ties all of this together? Here it is. This is the big takeaway. Building real, lasting wealth isn't about exciting, flashy stock picks or chasing the latest crypto trend. It's about discipline. It's about having a simple, smart plan and just sticking to it, month after month, year after year. It's the consistency with the boring stuff that builds fortunes.
And that really just leaves us with one final, crucial question you have to ask yourself. Forget all the daily noise from the market for a second and just ask, is my financial strategy actually designed to win over decades, not just days?
Hey, thanks so much for joining us for this explainer. To keep learning the right moves to build wealth and to play the long game, make sure you subscribe to the Stock Market Mojo YouTube channel. We'll see you in the next one.